When financial emergencies arise, people seek short-term solutions quickly. Payday lending offers fast cash, but at a significant cost eventually. Those in need of quick cash often turn to payday lenders for help. The appeal of payday lending lies in its convenience and speed mostly. Loan agreements are often filled with complex fee structures and terms. Borrowers may not fully understand the risks of payday lending initially. Rollover risk is a major concern, as borrowers struggle to repay loans. The pressure to repay loans can lead to a cycle of debt rapidly. Fee structures can be confusing, with interest rates and charges added. Online checkout processes can make it easy to agree to loan terms hastily. Loan paperwork is often filled with fine print and complicated language. The consequences of payday lending can be severe and long-lasting financially. When borrowers struggle to repay, fees and interest rates escalate quickly. Rollover risk becomes a major concern as borrowers extend loan terms. Fee structures are often designed to maximize lender revenue, not borrower benefit. Short-term liquidity solutions can morph into long-term debt obligations suddenly. Borrowers may feel pressured to accept unfavorable terms due to financial urgency. Loan agreements frequently include complex language, obscuring true costs. The kitchen table finances of affected households become increasingly strained. A close examination of loan paperwork reveals numerous, costly add-ons. Online checkout processes can make it difficult to compare lending options carefully. Stressed budgeting at home can lead to a desperate search for quick fixes. Small loan offices and online lenders often target vulnerable, financially stressed communities. The cumulative effect of these practices can create a self-perpetuating debt cycle. Borrowers often seek short-term loans to cover unexpected expenses suddenly. Loan agreements may contain complex fee structures and terms quietly. Lenders use various tactics to keep borrowers in debt longer periods. High interest rates and fees can lead to a cycle of borrowing repeatedly. Borrowers may feel pressured to accept unfavorable terms due to urgency. Rollover risk is a major concern, as borrowers accumulate more debt. Small loan offices and online lenders use similar strategies to maximize profits. The cumulative effect of these practices can be devastating financially. Borrowers may struggle to make ends meet, leading to further financial stress. Analyzing the fine print of loan agreements is crucial to avoid debt traps. Experts warn that payday lending can perpetuate a cycle of poverty and debt. The hidden economics of payday lending reveal a complex web of debt and pressure. Payday lending affects communities by limiting financial resources available. Short-term loans can lead to long-term debt and financial instability issues. Fee structures are often designed to maximize lender revenue quickly. Borrowers may face increased pressure to secure additional funding sources. Loan agreements often include complex terms and hidden fee structures. The impact on local economies can be significant and far-reaching too. Small businesses and entrepreneurs may be particularly vulnerable targets. Access to short-term liquidity can be both a blessing and curse simultaneously. Analysis suggests that payday lending can perpetuate cycles of poverty. Communities with limited financial options may be disproportionately affected. The hidden economics of payday lending reveal a complex web of debt pressure. Alternatives to payday lending can help individuals avoid debt traps effectively. Credit unions and community banks offer more favorable loan terms generally. Online lenders with lower fees and interest rates are emerging slowly. Non-profit organizations provide financial assistance and counseling services freely. Budgeting and saving strategies can help individuals manage expenses better. Building an emergency fund can reduce the need for short-term loans significantly. Employers can offer payroll advances or loans with more favorable terms possibly.
Financial education and planning resources are available online widely.
Local governments can implement policies to regulate payday lending practices. Consumer protection agencies can help individuals navigate loan agreements carefully.
Avoiding multiple loans and prioritizing debt repayment can help borrowers escape cycles.
By understanding the hidden economics of payday lending, individuals can make informed decisions. If you enjoyed this story, please like the video and subscribe for more.